It's a slight rebound across the Asia Pacific after the fall that we witnessed in yesterday's trading session.
It's Gujarat Industries Power Limited. They have been, talking about increasing capacity over there. So that's, one stock that we'll be looking at.
They said that they will capitalize on market leadership in both the farm and the auto segment. We have the Nifty at 23,530, which is a gain of 61 points.
We want to stay invested in ICE because at least 70% of the market 3 years from now will be ICE.
Disbursements, we have made our system ready to make sure that we don't disburse in cash beyond 20,000 annually.
Defense Ministry issues RFPs for 156 light combat helicopters.
We like pockets of pharma, manufacturing.
We're looking at a very green screen once again with the Nifty cruising above the 23,500 mark.
We're not looking at 1 quarter or 1 year. We're looking at a multi-year plan.
The IPO itself saw strong subscription, nearly 100 times subscription for its 740 crore IPO.
The future looks very, very bright. There is an anticipation that there's going to be a large block deal in Indus Towers very soon.
It's a green-looking screen. Nifty has stabilized above the 23,500 mark.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good afternoon. That was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me, of course, Sonia and Nigel. And guys, it's been a green day. I think the twin greens, Nigel, you and I think let's take some credit, right? But I guess it's been a good day. And the original grouse with which I started in the morning, that banks are not firing, they decided to come to the party in not a bad fashion at all today.
Absolutely. I mean, this is despite the rally that we've already seen, right? One would have thought that some consolidation coming after a long weekend, but no, there's fresh vigor in the market, lots of stocks hitting fresh highs. I think the bulls don't have anything to complain about.
Well, that's right. Just one point, that I wanted to make is that the markets are higher, but the VIX hasn't cooled down today. So the VIX is moving up with the Nifty. So that's just one factor that you should take note of. Sometimes when they move in the same direction for a longer duration, then in fact, we brace ourselves for some bit of a time-wise or a price-wise correction. So that's point number one. Point number two is the breadth of the market when we started off earlier today was firmly in the favor of the number of stocks that were advancing. If you pull up the crisscross lines, you'll see that those lines have got closer to each other, and now it's almost 1:1. So just keep an eye out on that. Yes, your portfolio may be feeling good, but from the morning, the breadth actually has narrowed down a little bit as well.
Well, that's a fair point. Today is not such a bright, sort of vibrant screen on the mid-cap side of it. It's not, the flourish is not as much as what we were used to seeing in the past. But remember, there's a bit of a catch-up perhaps that the large-cap indices are playing, because last week, it was a 7% gain for the mid-cap index, 8% gain for the small-cap indices, and individual stocks, of course, doing much, much better within those indices. Today's Nifty high is 23,579. So the litmus test is how much closer or how far away from this level will we actually close. Look at that chart. It's been rock steady at least so far. Will the last hour see, a final, another hurrah? Or will it actually see some profit taking? We'll find out. Pull up the Nifty contribution, and there it's quite evident that two of the big guns for the market, the large caps, they're firing. I'm talking about banks and IT, and that's what's kept the index in that very steady fashion throughout. So Indus Bank, SBI, ICICI Bank, of course HDFC Bank, all the big boys on the banking side, they're firing away. That's the Nifty Bank, adding 400 points to the tally. And again, building above the 50,000 mark. It breached that level finally on Friday, and we've got to follow through, so that's good. The other part of the market is IT. It's not a very huge tidal wave of buying on IT, but nonetheless, look at stocks like Wipro, LTI, Mindtree, even Infosys. There are incremental gains that are coming through, and that's making up for losses on some of the bigger stocks, like Reliance. For instance, Reliance has been a drag. ITC has been down. So these are some of the major names which are exerting downside pressure. But otherwise, I think large caps, at least the banks, have done well today.
Okay, the banks have done well. So let's take it straight to our first guest, right? How should you position yourself in this last hour of trade? Mitesh Thakkar is joining us. Mitesh, we've been talking about this as to how this is a very, very strong market. It's not giving up on its gains at all, at least up until now. What do you do at this level, 23,540, and what's the closing strategy?
So, Sonia, a couple of things. One, early in the morning, I've been suggesting to shift into financials or banks as a trading bet because one, they've been underperforming. Two, I think in the short-term charts, the Nifty is slightly overbought, while the Bank Nifty is still showing good traction. So, I think the next few days could be of financial names, especially the housing finance companies, the stocks like Shriram Finance, HDFC Bank, etc. So that's where the traction is. And that apart, I think, for the Nifty traders, yesterday's high, I think, becomes an important pivot now. And 23,490 till that is being taken out. Just maintain a long bias and keep holding on to long positions. So now you can trail your stop loss about 50 points from the current spot levels, and 23,490, 485 becomes your trailing stop loss level. On the stock side, I have a buy on Power Grid. Keep a stop at 326. Look for targets of 342. And the other one which I like is RBL Bank. It's come up a bit, so I would want to see it get past levels of 262. So buy about 262 with a stop at 257.5 for targets of 275.
Okay, all right, got it. Mitesh, thank you very much for that. Well, let's bring in Sudeep Bandyopadhyay into the conversation. Sudeep, always great to have you with us on the show. So, let's get your broad thoughts on the overall setup, considering how the market is just continuing to make fresh intraday highs on a daily basis. What do you make of the current momentum, and would you be a buyer, or are you now more inclined to perhaps some profit taking?
Well, Subi, I think a couple of things. One is US market has been strong on Friday, and naturally the follow-on was expected in Indian market. And number two, I think to your question that there is a continuous buying coming in the market, the reason is very clear. There is too much of liquidity which is chasing Indian stocks, whether it's the foreign investors or the domestic institutions. I think there is enough and more liquidity available, which is looking for buying opportunities. And that's what is happening. Every day, I think we are seeing this. Even after a bit of profit taking on an intraday basis or towards the end of the day, I think next morning when we open, again, we are reaching new highs. The trajectory is definitely positive. And I think the ingredients which one monitors are all looking positive, except probably a bit of challenge on the oil front in the recent past. Otherwise, I think all the other factors look positive. We have a decent forecast of monsoon, which should ensure that the economy continues to chug along. The continuity of the government has been, to the liking of the market at least. And I think the reform process expectedly will continue, and that assures the market. The revenue collection of the government has been robust, and also the dividend from RBI, that will kind of cushion, if at all any welfare spending is initiated by the government, that cushion will be there so that the fiscal deficit doesn't go out of sync. So overall, we are in a positive scenario, and that's what the market is reflecting. As far as profit booking is concerned, yeah, selectively profit booking can be done. But overall, I think it's a market where one should continue to remain invested for better and bigger returns.
Okay, it's a very strong day, by the way, for the Bank Nifty. We've been pointing that out. Almost a 400-point rally is what the Bank Nifty is seeing right now. And it's really, powered ahead in terms of all the large cap banks as well that are taking shape. So one of the biggest gainers is ICICI Bank, up over 1%. SBI is also, rallying. SBI now, in fact, is up almost 32% this year. So big move coming in there. Sudeep, any thoughts on that? Anything from the banks that you would want to put some fresh money to work in?
Well, I've been recommending HDFC Bank for some time, and I think that also has moved up today. And I believe, it's worthwhile buying HDFC Bank even at current levels. Between PSU and private sector banks, at this stage, I would prefer private sector banks. The asset quality improvement, what was expected, has happened. Very little opportunity for further asset quality improvement. If at all, there will be probably some worsening when the cycle turns. So under these circumstances, I think I will focus on private sector banks. HDFC remains my top pick. Apart from that, some of the mid-tier banks also can be looked at. There are opportunities there as well.
Okay, all right. Got it. That's the take on some of those bank stocks. Sudeep, stay on. We have more questions for you. Let's look at another story that we're tracking. Now, sources say that Vodafone Idea is planning to sell its stake in Indus Towers. What does this mean for both companies? We have Nimesh joining in with details. Nimesh, this has been doing the rounds, right? I mean, that Vodafone could perhaps completely, may even completely sell all its stake in Indus Towers. What are you picking up and what could be the implications?
Well, I'm not too sure whether it will be a complete exit from Vodafone, but yes, Vodafone PLC is looking to sell a large stake in Indus Tower, and that might happen very soon. In fact, my sources tell me that maybe it can happen in a day or two. Now, just for records, Vodafone PLC owns 21.5% stake in Indus Tower, and that is valued at close to $2.3 billion. Now, first, what it means for Vodafone Idea. Now, UBS has written a note today morning, and they believe and they say that could the proceeds be used or be infused to Vodafone Idea. So there is a very high chance, but it's not as big an amount as what the street is anticipating. Now, I'll give you a background into this. Now, in 2019, Vodafone Idea had raised money via rights issue, where Vodafone Idea had put in, Vodafone PLC had put in close to $1.5 billion. Now, this money was infused by pledging the shares of Indus Tower. So, whatever Vodafone PLC sells stake in Indus Tower via block deal, the first commitment would be towards the lenders, and that outstanding amount is close to $1.84 billion. Now, assuming that entire 21% is sold via block deal, then Vodafone will get close to $2.3 billion, out of which the first would be $1.8 billion of lenders' commitment. Apart from that, the remaining $500 million is what UBS believes can be infused into Vodafone Idea. So that could be a near-term trigger for Vodafone Idea to do well. That's what UBS is believing, and hence they have a buy rating with a target price of 18 rupees. The second stock to watch would be Indus Tower itself. Now, even from an Indus Tower perspective, same, if Vodafone PLC sells the entire stake, $1.8 billion will go to the lenders, and the remaining will be infused into Vodafone Idea. Now, in Indus Tower, Vodafone PLC in March had sold 4.5% stake to Bharti Airtel, and that money was infused into Vodafone Idea, and the outstanding dues were paid for Indus Tower. If similar thing has to happen now again, 5,400 is what is outstanding as far as Vodafone Idea's payment towards Indus Tower. If that has to happen, if the entire stake is sold, if the money comes into Vodafone Idea, then there is a very high possibility, according to JP Morgan, that there could be a 15 rupees per share special dividend to Indus Tower shareholders. So it's like assuming that the entire stake gets sold by Vodafone in Indus Tower, there is an implication for Vodafone Idea, wherein they get $500 million of inflow from PLC, and for Indus Tower it would mean that potentially there could be a 15 rupees per share special dividend.
Okay, interesting one. Thanks a lot, Nimesh, for joining in and filling us in with all those probable scenarios that can play out. Sudeep, you heard what Nimesh had to say. How would you approach these stocks, Vodafone, Indus Towers, probable big dividend coming out?
Well, Vodafone Idea, I think things are becoming better. This Indus Tower stake sale by PLC, Vodafone PLC should eventually get them about $500 billion. That's what our calculations suggest. And that's definitely good for Vodafone India. Also, the dividend should cheer up the shareholders. Whose dividend should cheer up the shareholders. Fundamentally, they need to raise a lot of money. They have a lot of liabilities coming up in future as well. And the basic thing they need to do as far as business is concerned is stop the loss of customers. The customer loss has been happening on a quarter-on-quarter basis for a very long time. That needs to be stopped. 5G needs to be rolled out, and these require investment in the company. So we will wait to see how things pan out. But from an aggressive investor point of view, I think it's worthwhile, buying into Vodafone Idea. But please remember, you need to be aggressive investor. Then only, if you are a conservative investor, don't want too much of volatility, then probably stay away.
Okay. Sudeep, the other story that we've been tracking for the last many days is what's happening with Eminent, right? And the management was very confident about the growth both in the tractor as well as the auto business. But at this point, do you think a lot of the good news is in the price, or is the risk reward still favorable for long-term investors?
As far as M&M is concerned, Sonia, I think it's still a good buy. I'll tell you why we think that. I think, we haven't seen the tractor numbers pick up. And, we've been waiting for that for quite some time. with expectation of a good monsoon, probably rural income increasing, and government taking measures to ensure rural distress or whatever is being talked about gets reduced to an extent, I think tractor numbers will pick up. All the other segments are firing except tractors and farm equipment. If this starts firing for my M&M, I think things will be even better from here on. Under the circumstances, with the expectation of a good monsoon, I think one can look into buying M&M for a one-year kind of a horizon. Things should improve even from here on.
Okay, Mahindra and Mahindra, indeed, it's been a dream run for that stock in top gear. Best performing stock of 2024 on the Nifty, and, fresh records set once again today. Speaking of stocks moving higher, Power Grid is actually one of the best performers on the Nifty right now. I mean, it's up about 3% as we speak. So let's bring in Vivek, because he's been going through a Goldman Sachs note that seems to suggest that there is some sort of a Gujarat angle to the possibility of more orders coming in for Power Grid. Vivek, we're quite curious. Fill us in.
Well, good afternoon. Very, very interesting report from Goldman Sachs on Power Grid today. So, what Power Grid has, what Goldman Sachs has reacted to is the fact that, there has been some commentary coming in from the MD of GUVNL, which is Gujarat Urja Vikas Nigam Limited, the state entity over there. So, what they're saying is that over the next 8 years, the intrastate grid capex target has been pegged at 96,000 crore. That's the intrastate, capex target as far as grid connectivity is concerned, especially given the fact that there is going to be significant amount of renewable energy capacity addition coming in. So now, like we mentioned, the capex upgrade is attributed to the requirement for the state's renewable energy capacity addition plan. Along with that, the renewable energy capacity base is expected to almost triple to 73 gigawatt by the end of FY31. Slightly longer term targets as far as renewable energy is concerned. Now, what they're saying is that the annual grid capex will be rising almost 4x from the 10-year average of 2,900 crore that the state spends annually. Why do they like Power Grid? They like Power Grid for its large balance sheet, adequate free cash flows, and also remember, Power Grid enjoys much lower cost of debt compared to any other peers. In fact, almost a monopoly when it comes to the transmission space. Now, the main reason, as far as today's positive note is concerned, is the strong capex requirement that Goldman Sachs is projecting in the state of Gujarat, and the fact that Power Grid is seen as the major beneficiary of this particular spend.
Okay, all right, got it. So more money being spent on the upgradation of the grid, and who else but Power Grid would be a beneficiary. Got it, Vivek. Thank you very much. The street has definitely taken note of that report that Goldman has come out with. Thanks for putting it on our radar. Sudeep, so even Power Grid, right? It's one of the best performing stocks. I was looking at the tally, so it's the 5th best performing stock on the Nifty this year so far. The narrative, as I think, as our colleague Vivek was also pointing out, that seems very good as we're adding more power and grid capacity. The question is, do valuations still leave more headroom? What do you think?
Well, I think overall, Surabhi, the power sector is going through a massive positive momentum, and I think this is going to continue for some more time. The electrification has progressed rapidly, and almost every corner of India is now electrified. The power demand consequentially has gone up significantly. We are also looking at a transition from traditional energy to green energy. It's not going to happen overnight. It's going to happen over a very long period of time. But that transition phase has started. So every participant in the power sector is expected to do well, get lots of orders, get lots of business. However, as you rightly said, the valuation in some cases are looking a bit rich. And I would be a little careful in getting into Power Grid at this stage. If I have to buy something in the power sector, I will go back to the power generating companies. And NTPC has been my favorite for quite some time. It continues to remain my favorite. And even at current level, that is worth buying. We can also look at the power financiers, both PFC, REC, because this entire power generation capacity and other capacities which are coming up in the sector needs to be financed. Traditional banks cannot, they will do only a fraction. It has to come out of PFC and REC. So the opportunity for their business expansion, volume expansion is huge. So these two also from a long-term perspective can look at. But NTPC should definitely form part of a prudent investor's portfolio at this stage. That's what I believe.
Okay. All right. Another stock that I just wanted to quickly check with you about, Sudeep, was Interglobe Aviation, with the kind of traction that we're seeing both in terms of market leadership, market share, domestic aviation growth, as well as some relief on the on the fundamental front for the company as well in terms of the Pratt & Whitney dues. There's lots of positives for Interglobe Aviation, but do you think that the run is done here? Do you think that it's reached a mature phase of the upcycle, or do you think there's more to go?
Absolutely, Sonia. I am of that view that it has reached a stage where I think we have baked in all the positives. Look, aviation and airline is a very cyclical industry. I don't think there is any airline in the world which hasn't gone through the cycles. We have seen down cycles in aviation in India. We have seen Interglobe booking huge losses on a quarterly basis. From there, they have come up and they have performed fantastically. They have done very well. There is absolutely no doubt. But I'm not sure from here on whether the pace of growth, whether the kind of appreciation we have seen can be replicated, can be provided once again. So under the circumstances, I'll be cautious on Interglobe. It's a good company, doing very well, have a major market share. And their market share will not be challenged for some time, at least till Air Vistara and Air India get their act together. And that's going to take some time. So yes, they have leadership position, but the run probably is done.
Okay. All right, Sudeep, thanks a lot for joining in and giving us your analysis on the whole host of stocks that we just discussed as well. By the way, before we take that mandatory break, take a look at a few stocks. Alchem Laboratories, the stock is bursting away. There was a large trade that took place, so that one's moved up. Kalpataru Pa, I think, should come up for you as well. That's moved to the low point of the day. So post large trades, we'll have to find out who exactly were those parties. But for the time being, both these two stocks moving in opposite directions. KPIL as well should come up for you on the screen at some point of time. For the time being, we'll slip into a short break. When we come back, Shibani Sarkar-Kurian from Kotak Mahindra AMC will be joining us.
Welcome back. So the market's holding on to most of its gains, at least as of now. I mean, still 70 up on the Nifty, and the Bank Nifty is retaining a bulk of that 400-point gain that we had at the start of the show as well. So steady as she goes, at least as of now. We have Shibani Sarkar-Kurian joining in to take this conversation forward. Of course, she's from Kotak Mahindra AMC. Shibani, always a pleasure having you on the shows. Good to see you. So tell us, what do you think? So much has happened, right? Exit polls, then the election swing, the shocker, the absolute soaring temperatures, then the realization that maybe it's a coalition government that will last. So it's been a total roller coaster. But now, what's the stance that you're taking on an area that you've traditionally always liked for years, which is capex, which is manufacturing?
So hi, Surabhi. Absolutely, it's been a roller coaster, but now it's back to basics and back to fundamentals for the market. Now, before the elections and even post the election results, there was a lot of debate about continuity of policy and focus on investments. Our belief is that now that seems to have been put to a rest. Of course, we'll get to know more once the 100-day agenda is announced and we go into the union budget. But our belief is that policy continuity is here. And therefore, what has been happening over the last few years is investment-led growth, which is likely to continue with focus in terms of maintaining the path of fiscal consolidation. The good part is that the government today does have extra resources at their disposal, specifically in form of the higher RBI dividend that we have received. And that should also help them channelize some of incremental resources towards boosting consumption at the bottom of the pyramid. But specifically on the capex side, I think the capex focus continues, specifically on the public capex, which has been driver of the entire investment revival that we have seen so far. Incrementally, our belief, and it has been there before as well, that there are signs of pickup on the private capex side, though very nascent signs. Corporate balance sheets being strong means that with capacity utilization in the overall system being at almost all-time high levels, you should start seeing the private capex pick up. The next cycle of growth where infrastructure and investment is concerned will have to be driven by private capex, and that is something that we will wait and watch for. In our portfolios, our overweight stance that we've seen on the entire manufacturing and infrastructure side remains. However, we are also cognizant of valuations, and therefore where valuations are extremely rich, those are pockets that we would avoid. But the portfolio stance in terms of the sector remains unchanged.
Okay, hi Shabani, good afternoon and good to see you in. Talking about areas where valuations are rich and some of them have very, very good policies in their favor. Defense in particular. How do you approach these stocks? And some of them are up more than 10, 15 times in the last couple of years. And they are factoring in, I think, next 3-4 years earnings. But that's not stopping these stocks. They keep moving up. How are you all positioned on this sort of a theme? Because there's tremendous potential. But at current reckoning, maybe some part of the good news or most of the good news is in the price.
No, absolutely, Nigel. But this has been a theme that we have been positive on for a while. What we have seen in terms of the policy focus, the indigenization of defense manufacturing, and more importantly now possibly the export opportunity, that remains very, very large. It is possible that given the kind of run-up that we have seen and the valuations at which some of these stocks are trading, you might see a pause. However, the theme remains intact. And therefore, when we are looking at the sector, we have to take a slightly longer term view in terms of how the sector dynamics are likely to play out. And from that perspective, there are still segments within the space where we would continue to have exposure on the defense theme in our portfolio. Like I said, where there is a mismatch in terms of fundamentals and valuations have become extremely rich, those are pockets that we will avoid. But as a theme, defense continues to be a theme where we remain fairly positive on.
Okay, defense continues to be a theme, but look at that move in 12 months. Paras defense up 140%. I mean, a large chunk of that has come just in the last, 1 month or so, and 20% higher in trade today. So big moves coming in there. You said manufacturing is also a space that you like. Shibani, investment-led growth is something that you like. What about IT? I know it's been an underdog for a while, but do you think that fortunes could change?
So absolutely, Sonia. If you look at, with a lot of debate on valuations, if you look at valuations or in sectors where valuations are still reasonable and attractive, 3 sectors come to mind, and IT is one of them, specifically the large cap IT players. While the mid caps have still continued to outperform, large caps are still trading at valuations which are fairly reasonable and attractive. If you look at IT, there are 2 key parts to it. Structurally, we believe that the demand for technology is here to stay, and as new technology evolves, specifically with respect to AI and GenAI, the need for IT services and the growth opportunity remains intact. The problem clearly has been near-term, specifically with respect to discretionary demand for IT services. And given the fact that macro uncertainty at the global level, specifically in the US and the European geographies, continues to remain high, we've seen that IT spends have been muted. Now, this possibly could continue maybe for the next 1 or 2 quarters. I think in the near term, the trigger for the sector could be any decision decision that is taken by the US Fed in terms of a rate cut, which can be a near-term trigger. Structurally, however, we believe that maybe over the next couple of years, the growth in terms of the requirement for IT services will come back. And in that context, if you look at risk reward, especially where some of the larger players are placed in terms of valuations, the risk reward is in your favor. However, you may have to be a little patient for the next few quarters to see some of the improvement come through. The other factor is IT typically does see seasonality. So first half is strong and second half is weaker. But if in this sort of a context where first half can still see muted outcomes on growth, one may have to be a little patient to see some of the growth come back, which will be the key trigger for multiples to re-rate.
Okay, got it. By the way, the mid-cap index is springing to life. There's a gain of about 0.4%. I just want to call out one or two stocks that are looking very active, and there are big price moves happening. Pull up Precol. Precol is up 10 to 11%. Just some interesting stocks that are still bouncing around. Precol is one. Ramakrishna Forgings, so that's days high on Precol. Ramakrishna Forgings has seen a lot of buying in the last half hour as well. That stock's up about 9%. And then there are some monsoon-related plays, something like FACT, Fertilizers and Chemicals Travancore, if you want to know the whole name again. 13% up. So that's Ramakrishna Forgings days high, and FACT is seeing some very interesting buying. So even on a day where originally mid-caps were not doing too well, there's plenty of flair in the market that seems to be showing up right now. Shivani, I know we can't discuss individual mid-caps with you, but really, what is the approach to this basket? Because the rally is well and truly back. Last week, it was all about mid-caps and small caps all over again. Those indices have gone back to their record highs as well. So as a house, what's the call? I mean, what sort of themes, at least, mid-cap themes, are you still comfortable owning and buying afresh, of course?
So we, as a house, what we have believed is if you look at the entire market construct and valuations have been again off debated. What we believe is if you look at the large caps, specifically if you look at Nifty valuations are just marginally higher than what their long-term averages suggest on a one-year price-to-earnings basis. And therefore, from a market perspective, risk-reward continues to be slightly favorable for large caps and some of the larger mid-caps. Now, the issue has been in terms of how valuations have panned out for the small caps and maybe for the micro caps. And clearly, this segment has outperformed. However, when you look at the earnings expectation that is built into this segment, this earnings expectation continues to remain significantly high. A lot of the re-rating that you have seen so far has been multiple led in pockets, and in those pockets, the earnings expectations are high. So therefore, from a risk-reward perspective as a house, we continue to believe that large caps and some of the larger mid-caps are better placed, given the kind of valuation comfort and growth outlook that you are seeing. Within the mid and small cap segment, what we will avoid as such are those pockets where stocks have moved significantly ahead of fundamentals, stocks which have moved up because of low float, and therefore there is again a significant discount or a disconnect, I beg your pardon, between valuations and fundamentals. And within the space, segments such as, say, for instance, if there are reasonable valuations on the industrials, manufacturing, BFSI, consumers, these are segments, or even auto and auto ancillary within the mid and small cap segments, we continue to be positive. The overall dominant theme that we have been playing across our portfolio has been domestic cyclicals and companies which are getting a lot of the growth from the domestic space. And that theme continues to play out both across large caps as well as mid caps.
Okay, got it. That's the advice on mid caps. Shibani, good talking to you today. Thank you very much for your time. Thanks for joining in. By the way, guys, Sonia, before I toss it to you, more mid-cap names. I can't help but spot them. Look at Quick Heal. Quick Heal is really moving quickly, about 11% on the higher side. Lots of interesting names. Paras Defense, again, 20% circuit block trades happened in the morning.
On Quick Heal as well, there was a large trade that took place.
So yeah, I mean, markets clearly buying these mid-caps and small caps. Lots and lots of names which are flaring up this afternoon.
Absolutely. The day belongs to mid and small caps, but lots of large cap stocks gaining as well. Eminent is the stock on our radar. The company held its first ever investor day meeting and listed the group's growth strategy. Brokerages gave a thumbs up to the plans for various businesses and raised their stock price targets as well. In an exclusive conversation with CNBC-TV18, Group CEO Anish Shah shared his 3-point growth strategy, while Rajesh Jejurikar talked about the auto business. Take a look.
Growth and returns has been in our DNA. Unlocking full potential in Tech Mahindra and Mahindra Finance. Both are businesses that are very strong franchises. Both have had some struggles in the recent past and have underperformed their peers. But the lessons from there have put significant plans for growth over the next few years. Mahindra Finance is well on the path to turnaround. Techem with Mohit Joshi coming in has just commenced its turnaround. And both are businesses that I think are going to be very good for the investor and obviously for the group. And then the third is our growth gems. This is a set of 10 businesses. All of them have great potential. We have increased the valuation of growth gems over the last 4 years by 5x, from roughly 0.8, 0.9 billion to about 4.2 billion at the end of the last fiscal year. These are businesses that have a great market position. In many cases are leaders in what they do. Some have been playing in smaller niches and we need to expand those. These are businesses that when we started this collectively had a market cap of less than $1 billion, and we set a target of each business to get to $1 billion. There are 10 of them. And as many got closer to it, as we often do, we raised that target further and said, now we need to grow 5x. So the collective valuation of these businesses as of the last fiscal year is 4.2 billion now. And our target is to get to 17 to 20 billion from these growth gems that we have.
Several growth drivers for the tractor market here. We are very far from saturation. We have a big opportunity to gain share there, and products which we've recently launched, the 3XO, allows us to do that. So there is we are number 5 in that segment in the compact segment by way of rank. So and we think we really have a strong proposition with 3XO, which can make us number 1 or number 2 or 3 years. So there's a lot we can do in ICE, many new products, some refreshes or mid-cycle enhancements, as we call them, some completely new products. So, and we want to stay invested in ICE because at least 70% of the market 3 years from now will be ICE.
Okay, so that's an emphatic statement that yes, while they're investing in EVs, ICE also seems to be very much here to stay. All right, that's Mahindra & Mahindra. Now, you heard the executives there on the auto side of the business. Let's now talk about the technology side of the business, which is, of course, Tech Mahindra. We also caught up with Mohit Joshi, MD and CEO of the company, who says that they are very much on track to target an over 500 basis points margin expansion as part of the multi-year growth plan.
We will deliver a 15% EBIT margin by FY27, and so that is the plan. It's a 3-year plan. Again, I'm very reluctant to give quarterly or near-term targets because there is a lot of volatility, right? And because, as we've said, we're in the middle of a turnaround story. In the first year, you should expect volatility. You should expect us to go, 2 steps forward, 1 step back, because that is the nature of the business, right? We're also investing heavily in the business to create the foundation for long-term success. But we've given a very clear expectation of where we expect to be from a growth perspective, from a return on capital perspective, from a free cash flow perspective, and from a margin perspective by FY27, and to build to build on what already is a world-class franchise. I think things are certainly looking better than they did, a year ago. And from our perspective, look, we have a new strategic narrative of scale at speed. We have reorganized the organization. So we also have our own internal tailwinds working for us. But I would say that it's less dire than it was a year ago. And it certainly seems like things are going to get better 6 to 12 months down the line further.
All right, Mohit sounding confident out there to take margins from those mid-single digits to around 15%. A bullish argument says they can. A bearish argument says no company has seen margins go up in that sort of a manner. For the time being, though, the management sounded very, very optimistic in that chat that we had a couple of days ago. Let's slip into a short break. And as always, Nimesh is waiting for us on the other side. He's going to give us insights in terms of what's going on in dealing rooms. Welcome back. Well, one stock that Nimish was telling us earlier about was Indus Towers and a probable block trade that could take place out there. For the time, you just take a look at that stock. From the lows of the day, it's recovered close to around 3%. And I think most of that move has come in the last few minutes. It was at around 335 rupees odd, now close to around 344 odd. But talking about Nimish, he's standing by. He's going to fill us in terms of what he's picking up on D-Street Chatter. Nimish, take it away.
Hi, Nigel. Another strong day, largely in the broader market stocks. So the momentum in the broader markets and mid-cap and small-cap just continues. It may not show up in the index today. It's just up 0.5%, the mid-cap index. But there are a lot of stocks in the broader markets which are buzzing and are up 10, 12, 20% as well. The defense names are buzzing in trade. So are the other many mid and small-cap stocks. In terms of sectors, PSU stands out. So again, that momentum in PSU stocks continue, and that's well bid as well is what I understand. The only space which has done a bit underperformed is the pharma names, a bit of profit booking, so to speak. And I think the US data was quite weak for many of those companies, and hence a bit of profit booking there. But barring the large outperformance in the broader market stocks, the other big theme is that there are multiple block deals now in many mid-cap names. I'll cover most of them in my D-Street Chatter. But clearly the momentum seems to be with the broader market stocks now.
Okay, what about individual stocks? What are you looking at, Nimesh?
Well, Sonia, I'm starting with the large blocks. So I'm losing count on the number of block deals which have happened today in the mid-cap space. Kalpataru Power, big block, nearly 1 crore equity got changed hands. So the disclosures could be quite interesting there. Quickhill saw a 10% equity changing hands, but I believe there it's more like an inter-se promoter transfer, so not much to read in that particular block. But FIAM, another 3.5% equity got changed hands. So again, there the disclosures could be quite interesting. And Alchem Labs is also an interesting block deal. So even there, I guess maybe the promoter entity was a seller, so need to verify in that block data. But all these blocks will be very interesting to observe the post-market data on the entities. So all these mid-cap stocks will be in focus tomorrow as well. So that's the first. The second is Samudra Motherson. Been a big outperformer post the quarter four numbers, and now we are seeing a bit of traction from the larger HNIs as well. I understand some large HN investor active buyers, and then some big up move in that stock in today's market. The third stock is Sansera Engineering. Again, the stock has been consolidating with a positive bias. The stock has moved up a bit in the last 15 odd days, but now the feedback is that could be a very large block, a potential clean out trade very soon in Sansera Engineering. And the last is Zota Healthcare. This is going to be interesting. A small cap company, but there is a board meeting scheduled today for fundraising. It's likely to be a preferential issue, and I understand some large marquee investors are going to invest in this particular company. So again, the post board meeting disclosures on who all are going to invest will be quite interesting in Zota Healthcare.
Okay, we'll keep an eye out on that one. Ramesh, thanks a lot. So plenty to look forward to even post-market hours, preference issue to some HNIs. You have large trades as well. The parties will know post-market hours. For the time being, let's get in Mitesh back with us. Mitesh, tell us what's the trade you have? What's the buy or sell trade you have to reverse it in the next few days?
The Tata Consumer has come on the radar. I think, after a few days of pullback and consolidation, the stock is showing positive traction again. So BTST here, or even a buy. So BTST, if you want to keep a stop just below levels of 11.18 and look for targets of 11.45. Traditional buy would require a stop at 11.09 and a target of 11.70 on the upside. And that apart, I think the other stock which I like is the BTST and Wipro. Keep a tight stop at 488 and look for a target of 498.
Okay, well, thanks a lot, Mitesh, for that. Market is still holding very steady, up almost about 90 odd points. So as we slip into a break, let's listen into excerpts from our conversation with Gautam Shah, founder and chief strategist of Goldilocks Premium Research.
I think it's the kind of market where you don't need to apply your mind too much. All you need to do is just to control your emotions. I think that's the kind of bull market that we have been in for the last 6 to 8 months, because every single dip has been bought into beautifully. Local and global developments have been handled wonderfully. And I think the market is as strong as ever. As a technician, I always look out for overbought signals or topping signals. But even at current levels of 23,500, I don't see any such signals on the charts. In fact, after what happened on June 4th, I do believe that the market is internally and structurally even more stronger. And I think we are going to see much better days ahead, and the best is yet to come. If pockets like banks, metals, pharma, FMCG have a lot of value and technical strength and can be bought even at current prices. I think banks is really one place to be in because the risk reward is excellent. And my fundamental analyst tells me that from a valuation perspective, banks are still quite cheap. So yes, banks could be one of the trade of the next 3 to 6 months. Risk reward is excellent. Valuations are good. And the money is flowing in because people are coming out of a phase of underperformance. The likes of Power Grid, NTPC, NMDC, ONGC, SAIL, NALCO. I think all of these stocks have a lot of headroom on the upside and can be committed into even at current levels. But I think since a lot of underperforming stocks and sectors are making a comeback, I think fertilizer looks very interesting. Paper looks interesting. The entire auto ancillary space, looks very, very interesting. Sugar has made a very good comeback. Focus on these pockets and I think you will be rewarded with a very good risk reward.
Welcome back. We just have about 10 minutes left for the markets to close for the day and has indeed been a good day for the bulls. But IIFL Finance is also gaining in trade. The company says that they have addressed all concerns raised by the RBI with respect to the gold loan portfolio. They also spoke about asset quality concerns and the MFI loan book. Listen in.
So from our side, generally we've addressed all that we could from RBI observation perspective. RBI very timely and proactively appointed the special auditor on 23rd of April, and they have concluded their on-ground inspection as well. And they are, I would believe that they would have submitted their reports to RBI, and RBI might be in the process of reviewing those submissions which has gone in. They should be under 2%. The only joker in the pack is when does the embargo goes away and when I'm going to come back to from a resumption perspective. However, since the impact is on the gold business and that asset doesn't really give you too much of a P&L impact, we should be able to go under 2% by FY25. The embargo doesn't go away and we almost on the verge of Q1 getting closed, there would be a significant dip, like what our MD also highlighted in his release. We had grown at fairly decent pace last few years. And the objective is to make sure that we control our sins there before any kind of a surprise comes in, because it was a very heated market because of the embargo of lending rate, which was earlier limited to 10% of the borrowing, no more being there. It became the more risk-adjusted pricing and people were gung-ho and going for growth. we want to just revisit the entire environment and go a little muted and slow. And therefore, this degrowth came in Q4. Going forward, also, we believe that we're going to just make it a little more normalized with a growth horizon of maybe around 25 or 30%, and then take it from there.
Okay, so that was the management of IIFL Finance telling us earlier how they are pretty much dealing with all of those issues that the RBI has raised and looking forward to a resolution. The stock was holding up very well in the morning, but now selling has come back to it. Let's get into the last leg of the show today with Jay Bala of Cash the Chaos. Jay is joining in. Jay, so it's been a great ride for the market, great run, all the indices hitting fresh all-time highs, and the bank nifty is also now building on some momentum. What do you make of things, and what's the trading advice on the indices first?
Yeah, good to be here, Surbi. See, the Nifty is stretched, and it's from the June 4th low. The markets have been trending higher, and it's like a sprinter. It's come up really quite fast here, and the markets needs to unstretch. And as long as the Nifty stays about 23,300, it's telling you it's not going to unstretch now. But if it were to come below 23,300, I think the potential to drop to about 22,600 is good. And that will actually do the medium to long-term trajectory of the market a lot of good. And right now, going up in one straight line is not healthy for the market. So I'm not saying it's going to come down, but I'll just listen to what the market is doing. As long as it's about 23,300, the market is just continuing to go up. When it comes to the banking space, it's just the two stocks, SBI and HDFC Bank, that's keeping the banking sector up. Otherwise, most of the banking names are listless since the election results. The significant resistance is about 51,200 for the banking index, and the support comes at about 48,800.
Okay. Sorry, Jay, hi, good afternoon. Good speaking to you after a while. In terms of individual stocks, what are the stocks where you think positional calls can be taken on the long side?
Hi, Sonia. See, I had mentioned a couple of weeks ago that the markets is trying to find value in relatively new listings, and I advocated people to look at that space. I have a couple from that space and one tech name. Quick Heal is actually having a breakout today. So it's a stop loss at about 430 and a price objective of 720 for Quick Heal. And last time we turned bullish on this at about 184 levels in 2023, and it's had a pullback from multi-year high. So it seems to have found a bottom recently. So it has potential to scale fresh 50-week highs around 720. And from a relatively newly listed space, I like two stocks. One is Rosary Biotech. It's had a micro double bottom at around 650 mark, and it's probably heading towards 1,050. But you need to scale up your positions, put in something about 10% at current levels, and then add on pullback. That's the best strategy. And another new listing, relatively new listing, is Idea Forge. It's a drone manufacturing company. It's had a steep fall from about 1,300, if my guess is correct. I don't recall it exactly, but the bottom is around, and it's dropped about 50% from its listing, and it's breaking out of a downtrend line today. So a stop loss at about 698 and a price objective of about 1,067 for Idea Forge.
Okay, hi Jay, good afternoon and good to see you in. Things are looking good for our markets. As you said, we're moving up pretty smoothly, consolidating, then again resuming their uptrend. The worry for me is in the last week or so, we had crude oil prices that spiked up more than 5%. And Brent is holding around $85 per barrel. We have seen this in the past. It goes to around $90 and then it pulls back. You don't want that sort of a scenario to play out though. What's it telling you on the charts?
Yeah, dollar index, gold, silver, copper, and crude are all at an important juncture. Anything higher for Brent and dollar index, I need to probably flip the short-term view. I'm anticipating a correction for the dollar index and also crude. Crude, anything about 85.5 is going to point to higher crude for something about 95 odd levels, maybe even higher. The positioning, if you look at on the CME, it's one of the lowest in many years, even probably very close to the pandemic low. When it comes to the dollar index, I don't expect it to cross 105.75. That can have impact on most of the commodities. And the June lows for silver and gold should not get broken. If it does, I need to drop my bullish stance and switch to the other side. But I'm watching these names, these commodities and the dollar index very closely. They are all at an important juncture.
Okay, well, Jay, thanks a lot for that. Well, for now, we just have about 5 or 7 minutes before the markets close, and looks like it's going to close in a high. We're going to close at the closer to the high point. The Nifty is up almost 100 points right now. Sensex is up 300 points, and we had that last-minute flourish in the last 10-15 odd minutes, which is looking pretty good for the bulls. But Zaggle Prepaid is in focus as the company has recently signed an agreement with the payment gateway service Skydo Tech to facilitate cross-border payments for Zaggle corporate customers. Earlier today, we spoke to Raj N, the founder and executive chairman of the company, who said that the company sees a 50% growth for the next 2 to 3 years. Listen in.
If you look at our first quarter, which is probably, we should do about 125% jump from what we did last year. Last year, Q1 was 118 crores. This year possibly is going to be anywhere between 240 to 260 crores. The results we are seeing in FY24 and, going forward, eventually we see Zoyer settling down somewhere between, 45 to 50% of our revenue. Typically about 17% is how we have, looked at this year, and maybe we might possibly stretch by another, 2%. So we'll be in that 19-20% range of, cross-selling. New products is, Zoyer, which has already seen 30%. Plus, if you see, we have bought a company, Tax Planner, very, very recently. We have taken a 45% stake in that company.
Okay, Jay, what about the mother market? What are the levels you're looking at out there? Because that one's giving a lot of support. And anything you have read on the chart with regard to NVIDIA, even overnight it made a fresh all-time high, but it came off there. NVIDIA, Apple, some of those fancied names?
Yeah, the US market is all about the S&P 500 minus the 5. The big fives are continuing to clock higher highs. If you look at the other key indices, the Dow Jones has clocked high in March, and that's not getting exceeded. In fact, it's much below it. And if you adjust the S&P 500 for inflation, it's barely eking out again. And the NVIDIA has got probably a couple of higher highs to come through, but it's also looking quite stretched. So as a consequence, the Nasdaq has got higher highs to come through. But when it comes to Dow Jones, Dow Transports, and Russell 2000, they all look top to me, and the Russell 3K is actually much below the 70% of the stocks are below the 2021 level. So this is pointing to a very skewed market. Higher highs are due, but when the turn comes, it's going to be quite telling.
Okay, for now, higher highs. By the way, a little stat from our market action here today. 7 Nifty stocks hit fresh 52-week highs today, and guess what? 4 out of the 7 were from the auto sector. 3 were the two-wheeler guys, Bajaj Auto, Hero, and Eicher. They hit that 52-week high, and then there was profit taking, so they've all ended, about to end on the negative side. The fourth was Mahindra and Mahindra. Nifty Auto Index, because of the fact there's been consistent profit taking from morning, the index itself is ending close to the lows of the session. Jay, quickly, any auto stocks that you like, any trades that you'd advise on here? A lot of these stocks, they've been rank outperformers really over the last 1 year.
Definitely, Surabhi. We look at stocks outside the large cap space. That's been my consistent theme. You have to look at something like Wheels India. The fact that TVS Motors and other TVS names are doing quite well. And this is breaking out after several months. It's been a rank underperformance since 2018. The 2018 trend line is breaking out for Wheels India, and it's got upside potential somewhere close to 1300. But the breakout happened last week. So add a little now and add more on pullback. The stop loss should be somewhere about 720. So the risk reward is also quite attractive at current levels.
Okay, well, thanks a lot for that, Jay. Pleasure speaking to you. We have just 2 minutes for the markets to close. So I think let's wind down on what has been a really good trading day for the market. The Nifty goes home with gains of almost 100 points today. The mid-cap index is up 270 odd points. And really what's leading from the front today was the Bank Nifty up 460 points. So let's take it to the gainers first. The top Nifty gainer today is Power Grid, followed by Shriram Finance. Then you had Wipro. But it's really the banks that contributed in terms of, the heavy lifters today. So ICICI Bank, Axis Bank, HDFC Bank and SBI, all four up anywhere between 0.5% to about 2%. Then you had consumption names like Titan, Adani Enterprises did well, Tata Consumer was up 1.5%. And of course, auto names like Eminent were the big gainers, up over 1%. Post that, you had Adani Ports, which was up 1%, and BPCL, which was up almost 0.7%. But let's take it to the losers now and see what dragged the market today. Dr. Reddy's was down about 1.5%. You had auto stocks like Maruti, Hero, Tata Motors that came in for some profit taking. Some of the IT names like TCS were under a bit of pressure. Eicher Motors was a tad bit soft today. Tata Steel came in for some profit taking. Ultratech Cement was down 1.5%. But otherwise, it was a very, very strong market. I say strong because, we had no volatility through the day. It was a stable move. And we saw a big move in the last 10-15 minutes of trade where we ended at the highest point, conquered those new highs of 23,560. And the Bank Nifty is the one that batted for the bulls today. So pretty good day, folks.
Oh, absolutely. And in fact, the end is with that hurrah. I was, remember I was saying whether we get that last hurrah or whether this fizzles out. Well, guess hurrah is on the bulls' mind. Beyond the large cap screen, just quickly to point out some of the movers and shakers as well. The shipbuilders that we've been talking about, Cochin Shipyard, 10%, Garden Reach, 12%. Of course, Hindustan Aeronautics had a great session as well. Paras Defense, a lot of these stocks, Zen Technologies. So very strong theme on defense once again. Other names included Metro Brands, Nava, Precall 11% higher. So plenty of excitement in the mid-cap market as well.
Well, that's right. So it was a good trading session. Plenty of stocks moving around from the broader markets as well. And the headline index continues to move northward. For the time being, we'll wrap up on this edition of Closing Bell. Markets Forward comes up next.